Good morning, everyone. Welcome to RadioSilentPlay.com. Today is June 17th, 2014, and I am your moderator for today. Just heads up, I am not a financial advisor. Please do your own due diligence before trading any stock or options. Trading stocks and options require lots of risk. Okay, the reason I'm getting on online is because if you guys aren't noticing, there's more selling in the market. Okay, there's a lot of stocks that are testing 52-week lows, and the trend has been that these stocks are testing and breaking these levels. So I want traders to understand, when you are given a watch list, okay, over the weekend, okay, it's up to the trader to decide their entry, okay, whether you're going to get into that stock at its 52-week low via bid, or you're going to try to get into these stocks okay, on the ask. It's entirely up to you. What I usually tell my traders to do is to look for a plan before getting into the stock, and coming up with money management skills, okay, to decide how much you're going to enter per trade. Okay, and the reason I say this is because every trade that you get into, you should add the same amount. Okay, the reason for that is because if you trade one stock, okay, you will trade the next stock like the other. All right, so you have to practice money management. So if I'm getting into OTHM and I'm bidding fives, I'm going to add, okay, a certain position that I would probably add with the IDOI. Case in point, why am I doing that? Is because if I'm using that same amount of money that I'm using on OTHM and IDOI, okay, there's not that much room for mistakes. Okay, so you wanna practice money management. Now, if you're entering a stock that's a 000 or it's trading below 0005, then I would recommend that you go in a little bit less, because that is considered a lotto, maybe $300. Okay, but I want traders to understand that. So right now, if you look at the IDOI right now, okay, for the last several days, it's been holding 0009. Okay, right now, okay, their sellers have come into the stock. Okay, so what you want to take into consideration is that if my stop is a close below 0009, it's on 2 consecutive closes. Okay, that's what I'm doing. Okay, 0009, 2 consecutive closes. Okay, that's it. Okay, I'm not gonna, be like, oh, worried, hey, but I got in at 10 or 11. Nobody tells you to get in at the price but yourself. Okay, buy zones are just reference price points. Okay, the reason I say 9 to 11 is because, 9 to 11, you have, from 9 to 11, you have 20%. So if you're doing a stop close below 0009, okay, you're playing with about 20 to 30% risk factor. Okay, am I saying this stock is done? No. It can probably break 0009 later in the day, but if you look around the markets right now, there's a lot of selling going around. A lot of selling. Okay, the IWEB, you have a 3-bar drop. Okay, 3-bar drop. We talked about the IWEB. Okay, the IWEB, the buy zones were 14 to 18. All right. The reason I say 14 to 18 because I don't know whether this stock is going to hit 14 or not. Okay, but depending on what type of trader, if you're willing to risk and try to get in at 14, then that's your entry point. Okay, nobody's giving traders or telling them, hey, get in at 18. Okay, when this stock closed last week, it closed at 17. Okay, so when you come over here, you look at this 3-bar drop, okay, and your stop close is 2 consecutive closes below 14. Am I going to try to get into this stock at 18? No. The reason I put 18 because I have a buffer there, just in case if this stock doesn't hit 14. Okay, you know that. Oh, you know what? Typically, I'm going to try to get into the stock. I'm going to put $600, let's say, per se. Okay, and I can't add at 14 because there's just a huge bid. But that bid can go it can go in an instant. All right, so if I look at the IWEB right now on level 2, okay, the IWEB right now is it's got a low of 12. So we just broke that 52-week low of 14. Now, if this stock closes below 14 and 2 consecutive closes, what does that mean? It means you stop out with no emotion because that's your stop. When you trade these stocks, you're taking on risk. Just understand that. You take on risk. You, as the trader, take on the risk. Okay? Right now, at 12, you have 1.6 million. You got about 850,000. You got about 3 million. Okay, shares at 12. And now you have a seller, BMAC, at 14 with an ask of 14. Okay, trading stocks is like playing poker. You don't want to tell the other person your hand. I'm not doing this webinar to get you to panic. But you have to understand, when you enter a stock, you have to have an approach to that stock. Because not every stock will go your way. All right? Yesterday, there was some chatter about MNVN. Okay, they were talking about how the stock is a POS. Okay? That acronym is, all these stocks are basically POSs, all right? What you're doing is you're trading levels. You're using your money, okay, that has no intrinsic value to buy a stock at a certain level to sell it at a higher level, okay? Now, did this stock break down? Okay, let's take a look at MNVN. Okay, MNVM, when we first mentioned this, is at 2.0. It hit a high of 94. It consolidated. We made it into a group play, and some traders got in at these levels. Okay, we talked about the 0.004 level when it was holding above this level. Now the 20-day moving average is kind of curling down because it may retest this 52-week low here. So you got a double bottom opportunity here. Now, okay, can this stock break below, okay, this level? Yeah, it can. Can it bounce off this level? Yes, it can. Okay, so I want traders to understand that you create, okay, you create the trade. Whether it's going to be a bottom buy zone opportunity for you, okay, it's entirely up to you. When I tell traders to scale in, that doesn't mean average down, okay? Because you have your parameter, your stop. So if this stock closes below 14 and 2 consecutive closes, you're not going to be scaling down, okay? Because your assessment is, if this stock closes below 14, which is IWEB, on 2 consecutive closes, I'm out. I'm not scaling down. I'm not, no, because my floor, my ground floor is 14. Okay, a trade is a trade. Whether you want it to keep going lower or you have to set parameters. All right, XUII, right now oversold 27. Let's take a look at XUII. XUII is at 22 right now, and you have a bid at 2. All right, what's this say? Stop close below 2 and 2 consecutive closes. Okay, and the buy zones are 2 to 25. Right, so there's no reason why traders should panic. Absolutely no reason. I mean, right now, if you look at the entire markets right now, okay, if I look at all the OTCs, okay, this is pretty much a down day. All right, there's a lot of stocks that are testing 52-week lows right now. A lot of stocks. Okay, a lot of stocks are testing 52-week lows right now. Okay, does that mean panic? No. You have your parameters. You know your stop levels. If a stock closes below that stop level on 2 consecutive closes, what does that mean? You stop out. Okay? There's no reason to panic in these stocks. All right? Because with stocks, okay, there's going to be other opportunity. Exactly. Junior just said it. Stop loss, no panic. That's it. If the stock If the stock breaks below your stop, it's up to you as the trader to decide your stop levels and your risk threshold. Okay? It's not crossing your fingers and hoping. You have to know your trade plan. As Junior says, you have to know your trade plan. Okay? Because unfortunately, okay, in trading, you will accrue losses. But it's how much losses you take. That's what's going to keep you in the game. If I know that my stop is 20%, 30%, I know that's the max move on how much I can lose. You know, I'm not worried. I'm not going to go on chat. Okay, I see it all the time. I see this all the time. You get in a chat room, and then you start, oh, this stock sucks, or this stock. No, we don't go on the chat room to complain. All right, you know your stop levels, you know your parameters. All you have to do is radio silently play that stock. Okay, you don't need to go on there and start saying, "Oh, this sucks." Okay, because what is it going to do? What it's going to do is it's going to create a chain reaction and a panic mode. And then what's going to happen is you're going to be so focused on the emotion that you're going to not stop out. And then what happens? You lose money. And then instead of blaming yourself for the trade, okay, you're blaming the system. And that's not how this works. Okay, you have to, as a trader, okay, take on responsibility for your trades and have parameters. Okay, this is the trading game. Okay, I didn't make the rules, I just play them. All right, so at the same note, you know, I want traders to kind of understand this system. All right, you know, I'm not sugarcoating or saying that justifying any stocks that have been mentioned, but at the same time, traders have to understand that when you take on a stock, okay, it's your responsibility at what price you're getting in. Okay, be disciplined. Okay, be patient. Because if I'm getting into a stock, I'm going to perceive that entry as very cheap as possible. So if I get into that stock at the lowest point possible, that's the price I want to get in. All right. So I just want traders to kind of, you know, gravitate towards that. You know, I get a lot of traders that what they do is they start panicking and they go, oh no, the sky is falling. No, the sky's not falling. Okay? The sky's not falling. Okay, I want traders to be decisive. Okay, what's my entry? I'm only getting into this stock at this price. My 30% entry on ask will be at this price. Okay, I understand that we're in the summer right now. I understand that there's going to be more selling into these markets. Okay, I understand that I'm playing a bottom play. Okay, I understand that my stop level is at this price. Okay, and if it stops out, you dust yourself off, you move on to the next. Do not let your previous stock trade hinder your next. Okay, so there's plenty of stocks. I mean, if you ask around, okay, stock ticks, you ask Junior, you ask Turtle Trader. I mean, I'm looking at so many stocks right now that are near or at 52-week low support. And some people just get impatient. There are so many stocks as of now. I can list you about 10 to 20 stocks. All right, and you guys have to be prepared for this. Now, if the IWEB breaks that 14, you reassess that trade. Okay, you look for that bottom, and then you can re-enter that trade. Okay, if you figure out that the stock goes down to 0009 to 11, all right, and now the stock has over 30 million at 0009, and then buys get bought at 10. Now you know, okay, now maybe that's the mental support at 0.001. Now I'm not saying that IWEB is going to do that. Okay, I just want traders to understand these levels. Okay, I'm not telling traders, hey, stop out. No, this is entirely up to the trader. Okay, So, you know, it's very important for you guys to understand this. All right. So that's about it. I will post this on YouTube because I think this is a very clear and concise training module for traders because you know you can't expect your trades to go your way all the time. So you have to understand that you have to be disciplined and patient in this game. All right. If there are any questions on what I just covered? Okay, great. So with that said, okay, right now, as of now, this is day one. Okay, so watch your stop levels. Okay, um, you don't necessarily have to use that 2 day consecutive rule. It's depending on you. Okay, I like to use it because sometimes as a trader you get faked out, and I don't like to get faked out. But again, I know some traders are trading with less liquidity, so take that into account. All right, you decide your stops. Okay, I like using that 2 time rule because when I trade options or I trade stocks, small caps, what have you, these stocks sometimes kiss these levels because what happens is many times traders use their brokers and incorporate stops, and those stops are hit by market makers, and then before you know it, they move the price up higher. So they shake these people out, as StockTix mentioned. You get a shakeout, and then the stock moves higher, and then you're out because you didn't follow that rule. So it's depending on you. You know, use your threshold, okay? Because only you know what you can afford to risk. All right. Okay, great. If I see anything that I see that has potential, I will send it out via SMS. As of now, I don't see anything really. But with that said, it could come at any time. So just be ready for that SMS if it comes up. But there are a lot of stocks that are testing 52-week lows right now. All right. Take care.